The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, I'm back here to the Diagnostic Trading Hour. I'm your host right here on TFNN, coming to you live on TFNN.com, and Tiger TV, coming to you live inside the eSignal platform, and on your mobile phone at TFNN.mobi on Wednesdays and Thursdays at this time. And, of course, tomorrow morning as well on the Bull Bear Binary Option Hour. All right, so let's check out what's going on in the markets today. And my headphone doing something weird there. Okay. And right now we're looking at the Russell, and I got the Nasdaq up, and we got some pretty big moves down with a pull back right now happening. We're sitting right around the 1 deviation level on Russell. We're sitting, we came down below 1.5 deviations, and pulling back up towards the 1 deviation level on the Nasdaq at the moment. And let me get, like I said, a couple more things up and running. We'll look at a little more detail. I want to get first, just get you caught up while my charts are catching up. They're still not caught up. I thought I was live right there. We got a little bit more to go. We got the S&P is down 22 points right now. We got the Russell is down 11 and almost 12 points. We got the Dow down 213 points now on the day. We're going over at NASDAQ. It is down 57 points on the day. So some big down moves, some great down moves inside these indices that you can take advantage of. I hope you are taking advantage of these fantastic moves today. Going ahead and looking at the metals. We got silver in positive territory, up 0.296. We got gold in positive territory, up 20 points on the day. So big moves in metals, big moves in indices. Going on over to our energy sector, we got a little bit of a mixed bag. We got oil is slightly positive, up 32 cents, and natural gas slightly positive, down 0.024 on the day. On our ags, also mixed. Corn is down 3 points, and soybeans is up almost 3 points on the day right now. Bonds in positive territory, up 1.09, with the dollar index getting hit down negative 2.48 or 0.248. We'll get on over at the euro dollar. It is up 61 pips. Euro yen is up 8 pips on the day. And looking at the pound dollar, it is pretty much unchanged. Flat on the day, up 1 pip right now. Pound yen down 86 pips on the day. We got the dollar yen is down 63. Aussie yen is down 70. Aussie dollar is down 8. Dollar franc's down 50. Dollar CAD's up 33. And silver, we already did silver, so silver is, like I said, positive there. Anyways, got some pretty big negative activity right there. And let me get up some other stuff while we're waiting on these charts, which, there we go. Oh, now they decide to wake up. Okay, so we're actually sitting at 0.1 on Russell right now. There we go. That's a little better. So I had them all up, and then I had to reboot and then catch up. Anyway, so while that's loading, we're going to go ahead and dive in to, let's see, how to get that. Okay, there we go. And pulling up one more piece. There we are. We get you the top news today and dive into all of it for you. Gold's starting to get hit, starting to see some negative, by the way. It is positive, but starting to see some negative tick flow there for you. Over here on one of my other screens. All right, so what do we got going on? Some of the top news today, DAX, what we're calling the DAX crash is continuing. So looking on over at that, it's just moving down, and it's back at a very important level right now. And they're down right now about 20% since their QE began. So sort of the opposite effect in some ways. Absent the Black Monday, this is the worst 5-day run for German stocks since the middle of the EU crisis in August 2011. So with that, we're going to have to look at the DAX today too. So I'll get a chart going for that one, and we'll pull it up and look at it here in just a moment. I'll go ahead and start feeding it. Give me 1 second as I set that up to start pulling, and we're going to have to dive into that if it's moving that much, right? Sometimes I don't notice how big of the move is over a long period of time. I usually try to make sure I back up and look at some of the larger moves, but I'm so big on just following what's happening at that moment on the chart, and that has seemed overall to work a lot better for me than a lot of the other things that I could do trying to look backwards. Okay, so yep, just needed to update DAX and FTSE there, and now I can switch it over on my charts. Okay, but yeah, massive. Lowest low since December of 2014. So, something definitely worth diving into today on our show. And so we'll come back to that in a moment. Let's see. Let's go ahead and keep digging on in. We got emerging markets. And they are, having a hard time. So they're continuing to actually record record lows as stocks sell off. QE coming to an end. U.S. most likely raising interest rates. Global issues. It is impacting all of these other ones. So there's a broad negative sentiment in the market. Stocks are down. Emerging market currencies have been weakening off since the Federal Reserve opted to leave interest rates unchanged a week ago. A lot of them are they're very shocked. That obviously brought down the U.S. and it strengthened things like the peso and the Brazilian yuan or Brazilian whatever it's called, RON or whatever, and the Turkish Trai, all getting stronger as the dollar gets weaker as they decided to leave interest rates unchanged. So making their currencies much stronger so that it buys more things, so the currency's worth more money, so therefore everything costs less, therefore driving down their markets. So let's see, the bonds rallying up as the stocks move down. So the U.S. 10-year yield fell to a weak low, which means a lot of demand for it. People are buying it. They want to take less and less for it. So we have modest U.S. growth on some of the U.S. data that came out, and U.S. Treasury selling $29 billion more of notes. Remember when they used to, you see those World War II ads that they had, where they're like, be a patriot and buy bonds, put your country in debt, and make it a slave to every other country that buys debt for going forward. Just a really backwards thing there. But Fed says that Yellen is talking today about inflation at 5. So is that on? Yes, it is. At 5 o'clock, we got Yellen right here. Yellen is going to be yelling there about inflation dynamics and monetary policy at the University of Massachusetts. Not something I'd be holding a position into. Not something I would want to be doing one of those currency trades that I know a lot of binary traders have got in the habit of doing, like these 7 o'clock trades and stuff like that. Might be a little cautious about doing that between 5 and 6 today when the market's closed at Nadex and you can't get out of the trade, because if she says something that ignites some fire somewhere, you're going to be stuck in that thing for an hour with zero movement ability. So just a tip for you. Okay, I know a lot of people like to trade those 7 o'clock binary contracts, but when something like that happens, you may want to use some extra caution. Maybe the perfect day to do it, but it's obviously an unknown factor that's not normal. We got the euro pound rising on up to 4-week highs. Not a conversation usually that we have a whole lot, not something we usually have a whole lot to say about it. But it is moving on up. And if you trade the euro pound, usually it's a little bit too little volatility for me, so it's not usually on my top radar. It's pretty smooth to trade. It's not usually a bad thing to trade. Like, it's one of those things that a lot of people can trade it and they enjoy it, but it's not usually my flavor of instrument. We got the S&P tumbling back, giving up all those QE3 gains, just up, and then away. Moving on down 10.5% right there off the highs in May, and a little bit more to go, and it could really break. So I was on the air with Tommy yesterday in the afternoon, and he was like, "Oh, I saw you going long, Darrell. You crazy?" And but I mean, I went long and I got out. Thank goodness, right? Because the market fell down like a ton today. But I just trade the intraday oscillations up, down. Overall, yeah, I think the market's going down, but that doesn't really matter if I'm going to get in and out today because, there's plenty of green bars inside all those red bars. And so just trade the charts, not the opinion. We got on over here, U.S. no home sales soar, and they top the estimates. And we can, again, we can look over at those new home sales numbers right in here. 552,000 on an expectation of 516,000. So new home sales doing really well. So I know homes are popping up all over the place, even where I live, and seeing them sell. Even existing home sales, everywhere we are, they pop up and they're selling like crazy right now. So I don't know what's behind it, but starting to see all the ads about buy a home, sell a home, we'll give you the money for the home, to flip the home, all that stuff starting to happen again. I don't know if that's a good or bad sign, but not my strong suit there. But anyways, just be careful on that buying and flipping if you can't turn it into an income property in the meantime. Some areas, though, it's just easy. So, and, it's just a great deal. So it's worth it no matter what. If it's a great deal, though, it can be an income property if you have a hard time flipping it because in October 2008 happens on you. Natural gas prices fall on down after the EIA reports larger than expected climb in U.S. supplies. We're just getting more and more and more energy building up. So natural gas storage right there. And would not give any of that credit to presidential policy, but simply, the Arab Emirates, everything else over there are going in and they're just turning on the valves and putting our oil people out of business. So I'm not exactly real enthralled by all the exact way it's happening. Of course, I do enjoy a $1.50 or $1.80 gas, but still, want the economy to be strong at the same time. Weekly natural gas report. So like I said, it went in and we got more than expected, 106 British thermal units, cubic feet there versus 95. And so much larger than expected. And earlier this afternoon, we saw natural gas falling off, and it's still down on the day from where it was on yesterday's close. All right. Well, that gets you caught up on sort of your top news releases for the day. And so with that, we can close those down. And we may come back to Forex Factor here in a little bit. Well, we're going to wrap that one up. And then I'm trying to open this DAX report, but it's fallen so far. Oh, it's still loading. There's a lot of ticks on there. Okay. So it's going to take a minute for that. And let's see here. When we get back, we'll go over the news calendar, and then we'll also do some chart reviews and see what all we can find.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All righty, folks, let's go ahead and check out the news and see where we're at. We had a couple of news trades come in this morning, but let's go ahead and jump forward to what is coming up, okay? Like I said, we got the Fed chair is going to be doing a little speech today at 5 o'clock, so that could have an impact on interest rates, okay? Again, she'll be talking at 5 o'clock. And let's see here. There you go. So she'll be talking at 5. And we got the yen. Hold on, I keep getting messages. Let's switch over. Okay. We got the yen Tokyo Core CPI, National Core CPI at 7:30. So that's coming out tonight. That ought to have some impact on the yen if you're a yen trader. In the morning, we're going to have the Euro-German BUBA president. Wiedmann is speaking at 3 a.m. And so that is going to have obviously a little bit of an impact this morning for you Euro traders out there. And your M3 money supply will be coming out at 4 o'clock. Tomorrow morning, we're going to have the U.S. final GDP and final GDP price index being released at 8:30. That actually gives us a setup for an iron condor when trading on Nadex. One of my favorite trades. If you listen to my show at all, you know that. And so you can go in and you'll be looking for an iron condor on the Euro USD, entering at 8 a.m. with an expiration of 10 a.m. for a minimum profit of $35. Okay? So again, entering at 8 with an expiration of 10 for a minimum profit of $35. And that's where you're buying the lower spread and selling the upper spread to do your trade. So if this is new to you, again, we make it really easy. Just use a scanner. But I go in and I choose the scanner. I go in and I choose my weapon here. I'll grab some spreads. And then from there, I'll go down and I'll, let's just say, I'll just pull up US Text. It usually has some. Let's see if there's any premium. But I'll basically just look at my profit. Okay, I'm not really looking at premium so much on this. I'm looking at profit on these specific ones, on the reward. And I want the same floor and ceiling, so I want them to match up. So let's just say if I was, we'll just say buying this contract, and this isn't a perfect example, but it'll work. Selling that contract right there. Nope, 42. I thought that was the same. 42.20. Oh, it is. It's just a little bit different on the P&L. Okay, so the floor and the ceiling match up as long as it stays really about in between not only this zone for break even, but this profit would cover that much loss, right? So cover loss down to about here, and then this profit would cover like loss like up to about this point. So it stays in this zone, then you have a profitable trade. And so that would be a iron condor. It's a neutral trade where you want it to stay above a certain zone. So we buy the lower spread, we sell the upper spread. Usually the market's more in the middle when we're trying to find that specific contract. I just don't see one at the moment that has it right in the middle. But that gives you, like I said, just a sort of a quick summary on what an iron condor is. Okay. So anyways, we got that as one of our trades that we can do. And tomorrow morning, we also have at 10 o'clock, we're going to have the U.S. Revised University of Michigan Consumer Sentiment Report and inflation expectations. They usually have an impact of about 10 minutes. So and it's usually not massive, but just good to be aware of it. And then Jeremy, he's all about speaking tomorrow. He's going to come on after his 3 a.m. speech. He's got another one at 12:30. So that guy has a long, long day. And he'll be speaking tomorrow at 12:30 in the afternoon as well. And New Zealanders, better late than never, or maybe they're early. I don't know. But they got daylight savings time shift coming in on Saturday at 10 a.m. So that'll shift around some of their news reports and things like that. So if you do trade the New Zealand dollar, just be aware that they are about to shift. Okay? They're, fall backwards, right? And they do it at 10 a.m. Eastern time, our time. So I guess that's midnight their time or 1 o'clock or however that works. Anyways, they will be shifting on Saturday. All right? And that catches us up for this week. For next week leading up to next Wednesday, we got a few things. We got a U.S. pending home sales coming up at 10 a.m. Again, U.S. pending home sales at 10 a.m. And we're looking to find iron condor on that on the euro dollar, entering at 9 for an 11 o'clock expiration, looking for a $25 minimum profit. Stay right there. I got about 6 more trade setups for you. Just stay right there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks, going back here to the Diagnostic Trading Hour. And let's see, I wanted to pull up right here. Let's see. All right, so we got U.S. pending home sales. That was coming up on Monday. We also got a pound, has various reports coming out. They have the net lending to individuals, the M4 money supply, and mortgage approvals. That's going to come on out at 4:30. So what we're going to do is we're going to hop in at 11 p.m. and on Monday for a 7 a.m. expiration on Tuesday, okay? And we're going to look for an iron condor on the pound dollar. We're going to look for a $35 minimum profit, buying the lower spread, selling the upper spread, adding those two together. Let's see here what else we got. We got the USB Consumer Confidence Report at 10 a.m. happening on Tuesday. So we're going to look at an entry on the euro dollar at 9 a.m. looking for the lower spread and upper spread combined max profit to be a minimum of $25 on the 11 a.m. expiration. We're going to do that evening. We got several trade lines up. So we got an Aussie, a pound, and a euro. The Aussie building approvals are going to come out at 9:30, and when those come out, we'll be looking for a 9 o'clock actual entry before the announcement, and for an 11 o'clock expiration, usually getting less than 30 pips of movement. So we're looking for a $30 minimum profit on the Aussie dollar, entering 9 for an 11 o'clock expiration, doing an iron condor on that one as well. Going over to the pound dollar. The pound dollar 4:30 a.m. report coming on out. We're going to look for a entry again at 11 for a 7 a.m. expiration. We're looking for $30 on this one. That has the current account, final GDP, final is very minimum impact, index of services, and revised business investment. So a lot of just already known numbers basically being released. And again, 11 p.m. to 7 a.m. On Tuesday. Entry there, 11 p.m. Eastern time for a 7 a.m. expiration. Iron condor for $30 on the pound dollar. Pretty similar trade happening on the euro there. Core had their core CPI flash, their CPI flash, their unemployment rate, which is a combination of all the other unemployments that have already come out. So again, it's not a surprise. The Italian preliminary CPI, not a massive force to move the market there. And so again, market usually stays within a 35 pip range on this one. Looking for an 11 p.m. entry for a 7 a.m. expiration for a $35 minimum profit on the trade. We roll it over. We're going to have NFP next week. So we got the ADP NFP report first coming on out, and that'll be released at 8:15 on Wednesday. So what we're going to do is usually the ADP NFP is not a big market mover. NFP can be a pretty big mover, but there's so much premium, it becomes a great iron condor as well. But for the ADP NFP report coming out on Wednesday, we're going to go in and we're going to look at the euro dollar. We're looking for a 7 a.m. entry for a 9 a.m. expiration. And yes, usually only about 30 pip movement. So something that people get so excited about is usually a very small mover. Going into the CAD GDP, looking for an 8 a.m. entry for a 9 a.m. expiration. Actually, we're going to do a 10 a.m. expiration. Got a little typo there. Let me note that. But 8 a.m. entry for a 10 a.m. expiration. $25 minimum profit on that. And let's see, it says 8 to 9, should say 8 to 10. All right, so just have that little side note. I have it down here. It says expiration at 10. But anyway, so on the dollar CAD for the CAD GDP, usually pretty small impact. So again, looking for a $25 minimum profit on that trade. Of course, we're going to have our weekly oil inventory reports on Wednesday. And that pretty much catches you up through the rest of the week on Wednesday. And I'll cover the rest of the trades. Next Wednesday, we'll talk about the Frank retail sales. We'll talk about the NFP report on Friday. And we'll go into the Aussie mid-year outlook and the pound construction PMI. So we'll talk about that next Wednesday for you, okay? So notice I do look at straddles, I do look at strangles, but I make sure they're really cheap with inside that entry. I talked about straddles and strangles yesterday on oil inventory. A trader sent it to me, and I said, hey, wrong trade. You may be better off doing an iron condor. So let's see here. And so don't just automatically do the straddle or strangle. The strangle obviously usually works pretty well because you can get them pretty cheap if they're there. The straddle, you really have to have some cheap premium to make that thing work, okay? So more often than not, I'm looking at an iron condor on that. Now, I'll often go to 12. Often, an entry at, 10 for, around a 12 o'clock expiration on an iron condor with 2-hour ranges. So is what I'll look at on the oil inventory report. Okay. And all right. So that gives us our all of our news outlook for the upcoming week. Let me go in and see what I got over here that we can check out on where the markets are at. It's going to make me refresh. There we go. Okay. And then we'll pull this one up as well. And just trying to refresh some things on this. I may have to do a little bit later. And if that's the case, then that's okay, because I got plenty of stuff on our list that we can go through. Let's see here. Some of the other topics that we've looked at. Yeah, that's not fun. It's not a fun error at all. Okay, hold on one second. I got a little chart thing going on. I have a new test version, so it's giving me some quirks. Okay, so yeah, I'm on a brand new test version, so an alpha version, and it's giving me some issues. And let me put one more note, because if I don't note it now, it won't get noted. Okay. All I got to do is bump on back down to the normal version, and I'll be fine. So that brings us back over here. Let me get this up, and we'll be right on that. Okay. Ah, that's always frustrating. All right. So, some of the lessons I can go over with you now. Looking at this trade that we were looking at earlier, a lot of traders want to look at, iron condors, iron condor possibilities. This is a pretty fat iron condor right here. If we go in and look at this trade, the premium is amazing right there. We got $100, $100. That's $200 on a $300 wide spread. Okay, again, $200 on a $300 wide spread. So, a lot of profit potential built into that trade. And if we put this trade on, basically this will cover a $100 loss on this contract. So if we go in and we buy this at 42.09, it'll cover us. Let's see, we buy this one at 42.09. It'll cover us down 10 points, down to 4,200. Okay, so literally all the way down to here. Okay, and right there. And then if we go in and we sell this contract right here, the upper contract, the bot contract making basically 9 points, will cover us about 9 points above where it's at right now, 42.30. Okay, so up to like 42.39. So a pretty massive coverage. Now, I want you to see the power of this because this is awesome. Okay, how wide are these spreads? Okay, these spreads are literally 30 points wide, 41.90 to 42.20, 30 points in width. Okay, $100 is 10 points because here's how it works. Every Nadex spread ticks in an increment of 1, whether it's 1 or 0.1 or 0.01 or 0.01. The smallest move, okay, the smallest move is always an increment of 1. So since this ticks in 0.1, as you can see there, okay, then there are 10 dimes. 0.1 is a dime. There's 10 dimes in $1 or 10 dimes in a point. Okay, so every point's worth $10. So 10 points would be worth $100. So knowing that I have $100 in potential profit here on both sides of the trade, if the market stayed like flat in the center, let's just say the market expired today at 42.20. Okay, the market expired at 42.20. Then I would make $200 on this trade. But what about my risk? Okay, so I can make $200 per contract. If I do 10, I can make $2,000. Okay, so understanding that, what do I got quite a bit of profit in there. Okay, what's my risk? Well, if I could make $100 on one side, and it'll hedge me for $100 on the other side, and it's $300 wide, there's only 100 points left in the loss. Okay, so there's a $200 risk, okay, on either side, right? Because they're 30 points wide. They're $300 wide. Okay, if they're $300 wide, and $100 of that is profit, then there's a $200 risk. So $100 profit potential, $200 risk. But if that one lost, the other side would make $100. So there's really, the market can't expire up at 42.40 and down at 4,200 at the same time. Okay, it can't expire up at 42.50 and 41.90 at the same time. Okay, so if it did expire up at 42.50 or down at 41.90, I would lose $100 total because one side would make $100, one side would lose $200. So my net loss would literally be just $100. Okay? Not really too shabby. Just a $100 risk to make up to $200. If it went down just the break-even point of where I bought either one of these contracts, I'd make $100 on one side, I'd be break-even. I'd still net $100 on $100 risk. If it expired, closer to the center, I could make $150 on $100 risk. I could make $50 on $100 risk. But the whole point is I can make up to $200 on this trade, and my max risk on the trade is literally $100. So knowing that basically I'm hedged on this trade, $200 down, $200 up, 20 points up, 20 points down, because there's only 10 points of exposure on either side, then I know that basically my loss points are going to be 10 points below the floor, 41.90, so 4,200, and 10 points below the ceiling of 4,250, so 4,230. So 4,200 to 4,240, 4,200 to 4,240 is those are my 2 points, like right here at 4,200, okay? And then right down here, or up here at 4,240. So what can I do? Well, let's go over here and let's choose binaries. And let's choose NASDAQ. Okay. And let's go on down here. And let's just see. What kind of risk are we looking at? Oh, let's go over to live. And that is not showing me all the contracts. Hold on one second here. Show me my end of days. Get rid of $1. Okay. There's all my NASDAQ contracts. And now let's choose, let's say, we only want the daily contracts. Ones that are expiring here at 4:15. Okay. And remember what we said? We said 4,200. Okay, so let's scroll down here till we find 4,200. We'll highlight that one. And we said 4,240. So up there. Okay, so that's where loss begins to occur. Okay? And, as of expiration. All right? So I'll lose basically $1 for every dime per contract there. $1 for every dime. That the market expires below that strike price. All right. So I have a couple choices. I can go, well, I want to reduce my risk, or I may go, you know what? I just want to put in some working orders. As the market moves around, like right now, the market is moving down. So you're seeing the buy one is having a little bit of risk. Well, that's actually good. That means that we probably want to look for the sell side hedges. They'll probably be cheaper right now because as the market oscillates. But again, let's look over at it, make sure we got our numbers right. 10 points above the floor. Okay, so 4,200. 10 points below the ceiling at 4,240. We'll see if we can find a couple hedges. And I don't expect to find them now. What I expect to do is put them on, and as the market oscillates and as time passes, for them to get filled. So we'll check those out when we get back. Stay right there.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. So, of course, make sure you're trading directionally while you're trading condors, so that way you can take advantage of the awesome movement we're getting in between. But just to stick with the lesson for this one today and try to focus on this specific trade, I would go in and I'd set up some hedges and set them up pretty cheap. You're getting $100 on each side. You could give up 20 on each. So you can go in here and you can say, okay, I'm going to sell these for $80. Okay, as you'll note, that's a $20 risk per contract. All right, so how many ever you're doing, you set that up, put that in there, and place that order, okay? So you put that in. As the market oscillates, it fills that order. They'll give me an $80 hedge for $20 cost, basically reducing my risk to about $20 a contract. Not too bad. Now, I'm already pretty much there on the 4240 side, and so I'm going to go ahead and you can open that up. And I'd say go for 20, but it's already like pretty close to where I'd want to get in on the trade. Okay, so it's within a couple dollars. So I'm going to grab that one and put 42.40, and I can get that for right about $21.25, $22, somewhere around there right now. So I'm going to submit it at 22, get filled a little bit better than that. Just got filled at what price? I got filled out at $21.75. So that's good. And so now I got a hedge, basically give me about an $80 hedge to the upside on my $100 risk, reducing my risk down to about $20 on that. So just a cool, simple way to, hedge. If you can get them closer, even better, I mean, ideally, you even get them inside of it, so that way, like if you got a 42.36, hey, how much better is that? Because it's $40 a profit in there that the spread is making to cover the cost of that hedge. So that's another way to look at another beneficial way to trade it. But that should at least get you going on the right side. Remember, we just wanted to stay within that. We can come up here. We can look. We're pretty close to that floor area right down there where we're down at 42.11. So that means our upper spread as of expiration, when all the value is sucked out of it, will be a great hedge. Right now, there's still like $84 of profit left in that trade, a premium that's just sitting there. The premium doesn't go away just because you get in. So you don't lose it if you're on the paying premium side, but you don't make it immediately if you're on the buying premium side. As time passes, as the market oscillates, then we can look at it and you'll see that it'll pull back up and then potentially make some nice profit for us. So if that keeps going back up and it's just oscillating right now, then we'll have a really good iron condor. If not, we do have hedges on. And again, the number one thing I try to remind people is just because you play a neutral trade doesn't mean you just have to sit there. It's one way to make money. It's not like, oh, well, I hit the ball with the driving club. Now I just sit there and hope it goes in the hole. No, I'm going to go out there. I'm going to hit it with some ranges. I'm going to hit it with some irons. I'm going to go out there. I'm going to, get it out of the sand wedge and, pop it out of the sand pit. I'm going to go over and I'm going to put it on the green. So don't stop just because you put the trade on. Again, you can look at hedges. You can also trade directionally whenever you're doing these trades. Okay. So just, several things for you to be able to, check out. All right. So as far as directionally, we'll look at that here in a moment too. So I want to try to show you, like I said, several ways to put trades on that can be really, really solid. And let me see what else I got listed on the show. But right now, obviously, great shorts. One of the things I taught some traders yesterday was the ability to get really simple and try to choose the daily at the market spreads. And we'll cover that next week about if you're just not quite sure what spread to choose, how can you quickly find that spread in just mere seconds? Okay, so we're going to talk about that next Wednesday. Make sure you tune in for that show. And y'all have a fantastic day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.